Hello everyone, welcome back to Neffy Cat. We're really glad that you can join us today. In today's video though, I want to talk to you guys about earnings reports. Earnings reports are a very, very important part of fundamental study for stock analysis, and you'll hear people say, especially for any type of actual investing, which is trading into stocks that you're going to hold for over a year, or even for longer term swing trading. One of the first questions you'll ask is, what is an earnings report? An earnings report is a quarterly report of a company's financial well-being. It's the equivalent of a financial statement, and it actually has three different financial statements in one. It has an income statement, which shows the total earnings. Then you're going to have a balance sheet, which is going to be showing the expenses, and then you have the cash flow statement, which is showing how much money they've actually made at the end of the quarter. One of the very important things that people look for in that is they look for the earnings per share, especially for those who are doing dividend purchases. They're looking for the earnings per share so that they can see, oh, he's a little scared here today. I'm going to see if he likes being in his house here. Yes. So they're looking at the earnings per share to see how much a stock has risen into. They can gauge, dividend and such, and if they're even going to have dividend that quarter by that. You want to ideally look at their debt to asset ratio, because if you have a company that has like over 50% debt to asset, then you need to be worried. It can have potential bankruptcy. So I just wanted to add that little piece of information. You don't want a company who's paying out 75% of its profits for paying off its debts, or 50% of its profits going off to pay debt, or anything like that. Not anything near that. So it really matters, because you can see, overall with the earnings report, you can see the company's health. You can, see how, if it's being overvalued, undervalued, exactly how it's doing. A lot of financial statements do actually include a comparison from the last year and also from the last quarter in their statements. Somebody here is absolutely checking those roofers out that are across the street from us. These eyes are just fixed. Yes, they are. So some important things that you want to look at. You want to look at the company's net income, which is its total income, and that is not including its expenses. That's not the cash flow. That's the net income. Then you can look at that. You contrast that, of course, with the expenses and the debt to asset ratio. See how much money they're spending, because even if they've got a really hefty profit coming in and they're not spending very much, if they're spending very little, then they're going to have a lot bigger cash flow. But if they're spending a lot and they've got a good profit coming in anyway, they may not have as good of a cash flow. Look at the earnings per share also to see how much the particular price has risen. And if you're worried about buying it in too high, that's the type of time to check. Of course, you want to do technical analysis for that too. You always, of course, look at its net sales. You look at its earnings from continuing operations, and then you calculate the net revenue minus the expenses to check the cash flow. Okay, and a company also has to a company also has to file Form 10Q with the SEC, and you can go to the sec.gov and then go to their reports area, and then you can look these up for any company that's registered with the stock market, and they have to be. And of course, one of the more important goals that people have with earnings report is to beat the earnings that they had from the last earnings report, and even from the last year's earnings report. You're going to see if the profit margin falls, if the cash flow falls, a lot of times people will sell off on the stock. And if it's a solid company that's going to rebound just fine, that can be a wonderful buying opportunity. Now, I've made here a super simplified idea just to give you an idea of earnings reports, and this actually really goes into financial statements in general. But let's say that a company has this much profit. Let's say that all of these temptations are money for them. And then one of the things you look at, that's the net. That's the net income. Here's their expenses, including their debts. So here they are paying these off, and then this is all that's left over. In fact, they had more expenses than usual. So we'll put a third handful in there. What do you think of Mommy getting into your kitty food or your snacks? So here's their expense total. And then compare that now to what they have left over. That's their cash flow. This is the temptations flow. Yes, it is. Let's see, how much of the cash flow will he eat? We're going to use the examples here of these tassels. Let's now pretend, I'm going to give him this to him in here. Yeah, you can have your cash flow in your little kitty house here. But let's say, for example, now that you're a company that makes tassels. And so you have tassels and you have keychains. So let's say that you have 100 tassels that you get $10 a piece for that quarter. So you get $1,000. 100 times 10 is 1,000. And you've sold 100 keychains at $5 a piece. And I've got 1,500. You've got 2,500 net. But your expenses, you paid $100 for the leather, which is actually pretty inexpensive. And then you've got, for the string, let's pretend here that you've got $50. And I forgot to calculate these, and maybe you got them for free. So maybe you've got 150 total expenses. Then you've got 2,350 when you subtract that from 2,500. And you've got 2,350 cash flow. Now, I did not include the stocks earnings in this, which would be a piece of it too, or the loss from stocks. But I just thought I would share this with you all today so that when you hear people talk about earnings reports, you'll have an idea of what they're talking about. Well, thank you all so much for joining us today. Don't forget to take those paws and press that like button if you like the content of our videos. Don't forget that you can hit the subscribe button and the notification bell if somebody has a meow. Yes, somebody's saying things here. Oh, you can also hit the notification bell and get all of his videos, all of Neffy's videos. He's on the other side now. He decided he was scared. He decided that those guys are scary. They're very loud, and he wasn't sure if the kitty is safe, which is probably why he has been attempting to move here today. But you can see all of his videos by hitting the notification bell. We're very grateful for you joining us today, and we'll look forward to seeing all of you in the next video.